Well, good afternoon to all of you. Thank you for coming on a Friday afternoon to event to see us and to hear about us. We're going to be as efficient as we can be for you to enjoy your Friday evening. And so on behalf of the whole team, I'm very pleased to welcome you. They're all shining and ready to give you some information about each of the clusters of the group. Unfortunately, François Hainaut couldn't be with us. He's traveling right now, but I'll give you a brief summary on Sun because I know that you've had already the financial analyst presentation, so there's no need to spend too much time on that. So just to introduce, well, I'm Jean-Pierre Dallet, the CEO of the CIEL Group. Jérôme is de Châteauneuf is a Group Finance Director. We have Guillaume Dallet, who's the Deputy Chief Executive. Lakshman Binik, who's the CEO of CIEL Finance. And on my right, Eric Dorchy, CEO of CIEL Textile. And the only but shining lady, Hélène, who is CEO of CIEL, and Dave Sigobin, who is in charge of HR and sustainability for the group. So let me just, so we're going to go through, first of all, the results, which Jérôme will cover. Then we'll go on to the clusters. We'll have a presentation on sustainability, and then a conclusion. And of course, we'll open up the floor for questions. So I'll be very brief, but as you've probably already seen, we've got some good figures published a few hours ago. So, you know, good improvement on the top line to 35.4 billion. Excellent performance, a good flow through to EBITDA of 7.1 billion. Group profit after tax for the first time in the history of CIEL, crossing the 4 billion mark to 4.3 billion, so doubling the profit on previous year. Profit attributable also doubling to 2.7, which is billion, which is leading to earnings per share of 1 rupee 57 on a price of 7 rupees 10, I believe this morning gives you the price earning ratio. And we wanted to draw special attention to the return on capital employed because we want to focus our management teams on that. So the average return on capital employed for CIEL is 14.1%, which is also a very good improvement. And then the excellent news is that our debt is coming down, not only in terms of total number, but especially so with the EBITDA going up at 1.7 times. So it gives us a firepower. We'll talk about it going forward. And the group free cash flow, which is also very important, at 4.2 billion for the year. So we're going to cover the 6 sectors. I don't think there's any need for me here to go into them because we're going to be repetitive. And I'll go straight on and pass on to Jérôme for further financial information.
Okay, good afternoon, everyone. It's a pleasure seeing you today. So I'm very proud to present those results, which, as you see, has been quite an achievement from last year, where it was a very good year. We almost doubled the profitability for the year, so that augurs very well for the years to come. So just a few key KPIs, financial KPIs I wanted to lead you through. In terms of revenue, we have a revenue growth of 24% to 35.4 billion. As you can see, the growth is mainly led from the hotel and resorts sector. Basically, it's Sun, which is our main component, which has had a very good year, like most of the operators in the industry, with revenue increasing by 60%. Followed closely by the textile also, and Eric will cover later on where the expansion is coming from. We can see a growth in revenue of around 20% for the textile. Finance also through the BNI, our interest in this bank in Madagascar has also had a very good performance. So overall, we can see that's a double-digit growth in most of our clusters in terms of revenue. So this slide is quite an interesting one. I wanted to demonstrate that CIEL is quite diversified today in terms of where we generate our revenue. So we've got a first pie chart on the left, which in the inner circle shows where we generated the revenue last year. So you can see we split it between Asia, Africa, and Mauritius. And the outer circle is the figures for this year. So what's interesting to see is about 22% of the total revenue of the group is generated from Asia, mainly from India and Bangladesh in the textile operations of the group. In terms of the Mauritian operation, we see that we've grown our share from 40 to 43% is because of a growth in the hotel industry for the year. So the good performance of Sun has in fact increased our share of revenue from Mauritius. And on the contrary, in Africa, our share has gone down from 38 to 35. But the cake has increased substantially from one year to the other. And on the right, you have a pie chart giving you the mix of revenue. I think it's also something I wanted to share with you is that most of our revenue today is in the hard currency, be it in euro, dollar, and GBP. So we generate more than 50% of our revenue in those hard currency, which is quite of an asset today to be in that position. Only 14% of the revenue is generated in Mauritian rupee, which you can see on the yellow part on the above graph. In terms of EBITDA margin, like Jean-Pierre just mentioned, we've reached a 20% level. Growth from almost all sectors. Healthcare, just the one, had been doped last year by the fact that we had inbuilt the exit of the Nigerian investment into the EBITDA line. So it had, in fact, distorted a bit the EBITDA last year. But on a purely operational basis, if you extract this exceptional amount, there has been a growth in EBITDA from one year to the other. But again, hotel and resorts doubling the EBITDA from one year to the other, and a very good growth in all the sectors. So reaching the 7 billion of EBITDA for the current year. That's the pie chart. The next one is the pie chart showing how the cake in terms of contribution to the profit of the group. So, quite an exceptionally, quite turnaround from previous year. Now we have 33% of the group profit coming from Sun in terms of results, net results of a group. Then comes very closely textile and finance. So both of them have gone over the 1 billion mark, which is quite an achievement. The two of them having very close results, one to each other. And then comes the healthcare with 350 million rupees, slightly less than last year in view of this exceptional item of the prior year. Properties, which was boosted by some investment revaluation of the portfolio. And the agro, which is our share of MIWA and RTO's results, posting a 306 million contribution to the group profit. The group free cash flow, even more important than profit, is how much cash we generate from our operations. And what we can see is that all the clusters, the main clusters have generated cash to the tune of 1.9 billion for the hotel, followed by the textile about 1.3 billion, the finance 1.4 billion, which leads to an overall total group free cash flow of 4.2 billion, leading to a net cash flow generated per share of 2.52 rupees. So we can see that from operation, which is the blue line, the yellow line being the working capital requirement, and the maintenance capex being the gray column within each of the different tags. This has led, so therefore these good results and this cash generated at source has led to a reduction in indebtedness of the group. So like Jean-Pierre mentioned earlier on, we're down to 12 billion rupees of indebtedness, coming from, we can see 17 billion just out of COVID, that was during the COVID years, and going down to 12 billion. This amount excludes 3 billion of MIC funding, which is at Sun level and which is treated accounting-wise as quasi-equity. We also see that therefore the gearing, which has gone down to 28.6% level and a net debt to EBITDA of 1.7. I also wanted to highlight to the floor that we've got fixed debt in terms of interest rate to the tune of 43%, and we've got on floating rates 57% of the group debt, and this includes the MIC funding. In terms of the mix, we've got around 54% of the indebtedness of a group in rupee, and the difference is in mainly euro and dollar. The average effective interest rate in the group is 6.6%. This is excluding the MIC, and including the MIC is 5.6%. So I think it's quite competitive rate given the current environment. Now, in terms of the value, the underlying value of our investment in our portfolio, we have seen a slight decrease during the year from 23.8 billion to 21.3 billion, mostly due to the bearish mood of our local stock exchange, which has impacted on the share price of CIEL, which has been hit quite considerably from the prior year, where it had increased quite a lot. So we have had a reduction of around 40% in the share price of CIEL. Alteo and MIWA also, post split and restructuring, has had a bad spell, which impacted therefore on the total market capitalization within our portfolio. But this was somehow mitigated by the share price of Sun, which has had lately a good run. Textile we revalue once a year on a DCF basis, and this has given us a boost on the basis of the projection we have. And properties, as I've just mentioned before, we have had a revaluation of the assets of the portfolio. So the portfolio valuation is now standing at 21.3 billion in the books of the CIEL, the holding company. In terms of shareholders' return, if we see on the left the bar chart, we can see that we've increased the payout quite substantially in June this year, with a payout an increased payout of around 33% compared to prior year, therefore increasing the dividend per share from 21 to 28 cents, which resulted in a yield of around 4% on the then share price. Now, in terms of share price, we've done better than the SEMDEX over the 12 months to June 2023. And since June, the share price has catch up because we moved from 652 to 710, which is closing today. The dividend policy, so often I've been asked this question, it's 75% of our net profit of the company. And this year we've declared 76% of our company's profit. So that's mainly the main highlights of our financial, which, as Jean-Pierre mentioned, just been released this afternoon. We'll take the questions later on, but I'll now move to the cluster review. So as usual, we will go through each of the clusters and we'll ask each of the CEOs heading those clusters to come and explain and comment their results for the financial year. So I'll start rapidly with the agro cluster. Most of you, I recognize, have been attending the analyst meeting, be it on Tuesday for Alteo and yesterday for MIWA. So I'll go very quickly on those results. CIEL, of course, equity accounting for both those entities, Alteo and MIWA, at the tune of 20.96%. So the contribution for the financial year has gone from 212 million last year to 306 million. So with an increase of around 100 million in our shares of the profit of the subsidiaries of the associate companies. The return on capital employed, which, as Jean-Pierre mentioned earlier on, is quite important for us going forward, and this is something which we're going to flag and we've highlighted this in our average results for the first time. So CIEL Agro, from CIEL perspective, is showing a return on capital employed of 8% compared to, well, last year, I don't know whether it was 5% or well, it was much lower. But what I wanted to say is that this is from CIEL perspective, and if we see the return on capital employed at MIWA level and at Alteo level, in fact, the best return on capital employed in a group is MIWA, with a 46% return on capital employed, and Alteo at 5%. So that leads to a combined return on capital employed of 19% for the agro cluster. But from CIEL perspective, because we equity account, this is impacting on the ratio. In terms of the results, very good results from MIWA, subsequent to a big turnaround in Kenya, where we used to have some substantial losses, which was offsetting the results of our Tanzanian operation. And now Transmara Sugar has posted $10 million profit. So this is quite a very remarkable turnaround. Still strong performance from TPC in Tanzania. In terms of Alteo, very good sugar prices has also boosted the results locally. And we have had also a revaluation of one of the property within the portfolio, the land property portfolio of Alteo, which has boosted the property results of the group. In terms of key strategic direction for CIEL Agro, maybe just to mention that Kenya, which is now profitable, the real challenge is to increase the crushing capacity because the limiting factor is the mill, and that should boost the sugar production to over 100,000 tons of sugar. And then the mere fact that the sugar price is very high currently in those markets, so this should lead to additional profit. In Tanzania, the strategy is more towards optimization of the production and byproducts from the sugar mill. At Alteo, strategy is the development, sustainable development of the property projects. So now that Anaita RS project is completed, there's a new project like it has been announced by Fabien Enouf, the CEO, last Tuesday, as the Anaita Beauchamp, which is a property project around the old sugar mill of Beauchamp. And of course, as far as agro sector is concerned, the challenge is to tighten cost control and to reduce indebtedness, to lower the cost of production, because we know that the sugar price we encountering right now is probably not sustainable. So the real challenge in those good years is to bring down the cost of production and to make sure that the house is in order for times which might be more difficult going forward. So that's it. Now we'll pass to Hélène Echevin, who's heading the healthcare cluster, so that she will present activities. Thank you, Hélène.
Bon après-midi tout le monde. Bien content d'être avec vous cet après-midi. Donc, on the healthcare cluster, the year was also pretty good. In fact, better than anticipated. It's true that we were getting out of a COVID year the previous year, which on the case of the healthcare was quite boosted from the laboratory with all the COVID tests. But despite the reduction of all the COVID tests, we saw a good rebound on all the normal activities, especially in Mauritius, but also in Uganda, where we have been doing quite well. So we are finishing the year at a profit of 350 million and an EBITDA margin of almost 20% and a return on capital employed of 22%. In fact, I would say Mauritius showed that we are very strong on our core business. Both Welkin, Darnay, and CIEL have been doing very well. And what now is coming is the new project, and I'll talk about it a little bit later. From a Uganda perspective, we rebranded all our Ugandan activity under the CIEL brand. And I need to say that the result of this rebranding was really better than anticipated. I don't know if you recall, but we have 21 clinics across all the countries and also a main hospital. So they are all now under the CIEL brand, newly refurbished, etc., which has helped a lot to grow the image and the activity. Also, we launched CIEL in Uganda a year and a half ago, and it's really starting to pay, which is good for us. And I think that's it for last year. And what's coming for this year? So first, we are very happy. We have started our activities in the north at CIEL Grand Bay in Montchoisy. And I need to say that the welcome of the market in the north has been very good. Good increase in our activity in the north. The clinic in the north is now able to do some OT, some operating theater procedures. So you can be operated in the north, be it on local anesthesia and general anesthesia for the first level of treatment you need to have. There's also rooms that we have there. For the time being, we have not opened the rooms at night, but we are checking and observing the market, but there's a possibility to open them. Then at CIEL Dane and CIEL Welkin, we are adding new rooms. We are adding new rooms in the form of a semi-private room. So it's a kind of room with a shared bathroom. This is to allow us also to tap into a middle tier market for the one who cannot afford a full private room. So we really think that will complete our offering on the market. There will be the Welkin room will be ready by end of October, and the Dane room will be ready by mid-November. Then we are also opening our new center in Tamarin. We are moving from where we were and adding some new facilities also. We have, for example, a CT scan in Tamarin. Currently, we don't have the CT scan, so this will be an added service. And then a big project we have been working on since the last 3 years is our new cancer unit. We would invest 500 million overall in that project, building plus equipment. And our first patient is expected to be admitted by 1st of February. We are doing that project in partnership with some French partners that will also provide all the technical expertise to us. Also, in Uganda, we are refurbishing in our rebranding process. We have also started a full refurbishing exercise, which we are continuing, and it really pays. And also replacing a lot of equipment. You know, in our sector, we need to regularly replace our equipment. Technology is a big thing in the healthcare sector. In the region now, when the slide was prepared, it was not official yet, but we are very pleased to announce that we are in Madagascar since yesterday through a medical laboratory business. And this is our first entry, I would say, in the market, which will allow us to grow, I would say, step by step. We are very excited by this new addition into our portfolio. Also, C-Pharma, for the one who have been in Welkin and in the north, you'll see that we have opened new pharmacy type with a much larger offering than what it was previously. And this is the direction we want also to take for all our retail pharmacy we have within our hospitals. Yes, the app. Some of you have on your table a little flyer. We are also very happy to have been able to launch our CIEL app. For the time being, it's only Android. So that's the reason why we have not really made a lot of noise around it, because iOS is coming soon. But for the one who have Android phone, I encourage you to go. I think it's a premiere in the island, and we have worked a lot on it. Why was it a bit of a complex task? because this app has all your medical file and all your history on it. And from a GDPR perspective and from a confidentiality perspective, you need to be able to hold a lot of data and information on that app, because you will be able to get your result, your lab result, for example, back to 2020 and for the rest of your life. So it took some time, and we are very happy. And then also still a strategic pillar for us is the clinical education. What is key is to maintain the quality of care through the training of the nurses, and we continue our partnership with Curtin University Polytechnic, and also working to launch our own training center within CIEL. I think that's it for me. Merci beaucoup.
Good afternoon. So textile. So the CIEL textile is made of 3 product categories. The woven, under the brand names of Aqua and Laguna, is actually 65% of the portfolio. Then we have the knits, which is tropic knits, and knitwear, which is floral. So knits and knitwear is 17 and 18%. Property Evolis, I won't comment. I guess Guillaume will do it. So from a revenue point of view, actually for the first time, we have nearly reached $400 million. Pre-COVID was $350 million. So we are substantially higher than pre-COVID. From a region point of view, Mauritius, Madagascar is about $220 million, which has been flat over the last 10 years. And the rest, $180 million, is coming from the expansion, mainly in India. We have 1 factory in Bangladesh and actually 7 factories in India. We just bought a very large building in the north of Bangalore, where we're going to expand capacity as well. Profit-wise, for the first time as well, we've crossed the bar of ₹1 billion, $24–25 million, same record profit. In terms of drivers, the biggest driver has been the woven, which has delivered an outstanding performance through the year in India, but in Mauritius and Madagascar at the same time. Floreal knitwear, which has celebrated its 50 years anniversary, is delivering very good performance for the last 3 years. And the knits cluster, tropic knits, is where we are actually facing challenges. The main historical customer, which is ASOS in the UK, is going through tough time with the competition of Shein on the fast fashion, and that impacts the volume and the margin which we used to have with them. So moving forward, the first step is the market environment has changed since last year because of inflation in the market and the high interest rates. As you can see, the consumption, especially in Europe, but as well in the US to a certain extent, has dropped. Last year, retailers have been struggling with the supply chain, and their focus was to secure inventory, and ultimately they bought too much. So the main trend today is they are busy flushing the inventory, and therefore the market is fairly slow at this point of time, waiting for inventory to get to the right level. The second element is when we say performance club level is more about OPEX, operational performances. Here we refer mainly to tropic knits again, where we need to reset the organization to move to the customer base of tomorrow. The third point is mainly about India. Just to share with you what's happening in our industry. As you know, China, and I've mentioned this before, is a dominant force since 2000, accounting for nearly 40% of the global trade, nearly $200 billion of exports yearly on apparel. The second largest country and very big, Bangladesh, is hardly 40 billion. You can see the scale. Vietnam must be 25 or 30 billion. India is 17 billion. Mauritius, Madagascar together, less than 1 billion. You see the scale. So you know the situation between the US and China. Thanks to Mr. Trump, he's been on the China on the China relationship. There's a ban on the Chinese cotton from the northern region, Xinjiang cotton. And that has led to massive move out of China, especially on the shirting side, because most of the cotton was coming from the China region. So if you want to move away from that cotton, then you go to India. So you buy cotton from India, fabric from India, and if you need to make a shirt, there is one and only, which is us. So we have a dominant position in India today on a mid to up market. And we're seeing people like Polo Ralph Lauren moving massively from China to us. In Europe, Hugo Boss as well, scaling up capacity with us. Therefore, as much as the demand is pretty low, overall, our share of that business is getting high in India. So there is a lot of prospect. The other segment in India is obviously the domestic market. The population is large, the country is meant to grow, as everybody knows. So there's a lot of prospect in that country for us. Consolidate our presence in Mauritius and Madagascar. What does that mean? It means that we are aiming at maintaining our operations in Mauritius and Madagascar, not growing for the time being. Then the three other points are what we call our pillars: sustainability. As you know, the fashion industry is one with a lot of impact, social and environmental impact. I'm pleased to share with you, and I'm sure Dave will do it later, that we lead the pack in sustainability in our industry. So we are quite advanced. The last element is we're moving now with the traceability platform. So all our operations will be on a traceability platform as from early next year, which is very advanced. So I won't go into too many details. So that's a good element. Okay. Accelerate momentum and digital transformation. Everybody talk about it. We're moving, but not fast enough, in my opinion. So that's a point of discussion internally. There's a lot to. Historically, we've talked a lot about automation. I know some people in Mauritius are advanced on automation. But in my sense, there is a lot more to gain from the OPEX and relationship with the supply chain and customers on data sharing to speed up and increase of OPEX. So that's something which we're going to accelerate further. We'll invest in more resources in that matter. And the beginning and the end of the story is people. So we know that there's a lot of volatility in the market. We're not too sure about what tomorrow will be. But if we have the best team, we will win. Thank you. So I'm pleased to call on stage Mr. Binnick, the CEO of CIEL Finance. Thank you.
Good afternoon, everybody. So I will share the performance of the CIEL Finance, the financial services cluster. As my peers, a good set of results, more or less tracking the group performance, and led by primarily the two banks. So BNI and Bank One significantly contributing to the revenue line, an improvement of 13%. The EBITDA also grew in sync with the revenue, 12%. Profit after tax was a big jump from an odd 700 to almost 1.1 billion. So a growth of 54%. EBITDA margin, very healthy at 31%, and return on capital employed at 23%. The performance has been led strongly by BNI Madagascar, with more growth led by the favorable interest rate environment. Interest rates have picked up, and the bank has benefited from that, from its depositor base, but also from lending. So the banking income was very good. It also has taken strong measures in terms of the balance sheet management, focusing on product offering as well as the interest rates and the liquidity, and how we deploy the liquidity, while trying to focus on the funding base as well. So that has benefited. Strong focus on asset quality and recoveries. So that as well has strongly benefited the performance of BNI. Bank One kept the momentum going from the prior year. Also a very strong performance on the past 12 months for our financial year. So in the interest income and the favorable switch of interest rates in the dollar, looking at Mauritius more specifically now, so that also benefited Bank One. And there has been some one-off reversals in respect of provisions. Provisions that have been provided quite a bit back, but has now been recouped. So that also enhanced the performance for the past 12 months of CIEL Finance. Midco has been subdued. We have, since March, a new CEO in place who has tabled a new 3-year strategy. We remain confident that the 3-year plan is achievable, and we look forward to an enhanced performance in that respect. So that's a bit on what has happened for the past 12 months. I move on to what's next. So I'll start with CIEL Finance itself as at the top. The focus will be inorganic growth to the extent that it's linked to the digital financial services segment. The sector is continuously adopting at a fast pace digital solutions. So either complementary to the bank, so in-house development concurrent to independent investments is something that we'll be contemplating in the next 12 months. In respect of BNI, we will look to increase our market share in our chosen segments. I think it's very important. We are significant in terms of the network in Madagascar, but we'll have to focus on a few chosen segments to enhance that revenue growth. Concurrent to that, we are doing investments, both technologically and in terms of processes, that hopefully will enhance operational excellence or lead to operational excellence. And concurrent to that, we want to deepen our data and digital roadmap. So execute on that. We are confident with the data repository that has been built now that it will offer opportunities to refine our product offering as per our client needs. So something to be watched for in respect of BNI. In respect of Bank One, we want to increase our market share more on the cross-border front. So clearly stated strategy by Bank One, Sub-Saharan Africa, in partnership with INM and a few other banks on the continent. So that will be deepened, and hopefully we can enhance our revenue line in Sub-Saharan Africa, and I want to highlight across all business lines. It will not just be limited to corporates, but also to retail and private banking. We want to review the structure of the bank so that it becomes more client-centric, attentive to client needs. So that organizational structure will be adapted in respect of the offering that we want to enhance, which is in Sub-Saharan Africa. Concurrent to that, we want to embed the data strategy. So again, a bit more advanced than BNI in terms of the data strategy. So we are looking for more embedment and quality from the analytics so that we can enhance the penetration in some client segments. Last but not least, beyond POP, we are enhancing the offering on POP and hopefully a couple of other digital solutions being offered in the forthcoming year. For Midco, we just said there's a 3-year plan, so we want some business development with some strategic alliances with partners, again, not present in Mauritius, but present in other markets. So more being complementary to these strategic partners, something that we will be looking at. Concurrent to that, the target operating model will be reviewed to the extent has partly already been reviewed. So again, client centricity, we are looking strongly at client service. I think it's a segment that differentiates itself through client service. So we'll try to make this happen, and also looking at operational excellence, because turnaround time is something critical these days for clients that are not necessarily located in Mauritius, but around the world. And finally, the digital transformation of certain processes, which has been strongly manual and people heavy. We are looking to more automation in the first instance, hopefully digitalization in the second phase. That's about CIEL Finance. Not much more to say. I'll take your questions later on. Thank you. I'll now pass on to Guillaume for the property segment.
Thank you, Ashman. Thank you. So on the property, just to say that the strategy that we presented to you over the last 2 years is materializing, so which is a good news. So if we look at Evolis, which is actually owned 100% by CIEL, through CIEL Textile and through CIEL Properties, we are very pleased of the progress. We've launched a Nouvelle Usine this year, which is a success. We've launched Flexeo as well in Solitude, which is a success. And today we have about 96% occupancy on a GLA of 65,000 square meters. So that's I would say, a very good achievement, particularly on these properties. So the net asset value that we have today stands at 1.4 billion rupees, so which is a yielding now net asset value. So that's on the Evolis. On our sustainable development of Fairney, so we are progressing well because we've launched the sales phase and we unveiled Fairney, La Vallée de Fairney, a tropical agri-hood this year. So we launched the farm living of Montagne-du-Lion and it was sold out, reserved. And now we are going through the signature of all the CRPs and with a target of starting infrastructure work early next year and delivery end of next year. So it will, let's say the profit and the cash will kick in into the next financial year. Regarding the accounts, I think that the accounts are impacted positively by fair value gains still, but you can see the growth in the top line, which is starting to materialize through Evolis, the rentals, but also through our ecotourism activity, which is picking up. Regarding this coming year and the way forward, on Evolis, I think that when we look at Evolis, our rental per square meter is below market rate. And we did it on purpose because we wanted to create destination and we wanted to be attractive to the market. So today we have a book with a rental per square meter, which is lower than the market rate. So there's a lot of rooms now for us to work on that book, now that we have this GLA available and full occupancy, to improve the top line. So that's a priority number one. Then we're going to start the renovation of additional space that we have in Flexeo, in Solitude, but also we just launched the phase 2 of Nouvelle Usine, which in 2 days has now full occupancy. So was in the press today. And we are also going to continue to work on some non-core assets that CIEL Textile will be moving out partly. So this we will repurpose as well. So that's for Evolis, and the big focus for us now is really because we've done a lot of work on regenerating places, creating destination. Now we are really focusing on operational excellence, which is customer experience, digital offering, and sustainability. Now regarding Fairney, so we started the sales of Fairney, so Montagne-du-Lion farm living, I talked about it. Now we're going to go into the phase 2 of Fairney. There's also other sales that we are doing right now, which might materialize in the coming years. So we are now in the selling phase of Fairney. And we are finalizing our ecotourism offering, and we have an eco lodge in the luxury segment, a very exciting project, which is going to come through this year. That's on the property. Thank you, and I pass it back to Jean-Pierre.
Thank you, Guillaume. So I'll carry on Sun, but I'll be very quick, as I said earlier. I mean, the results speaks for themselves. The EBITDA margin being at 30%, that's one of the best in the industry. We have a much improved indebtedness of the company, and cost management has been very good. I believe that going forward, it's all going to be about protecting our margins, in a sense that we are aware that costs are going up, and so we have to manage that. But we note a very strong push in ADR. And what is pleasing also is that the bookings that we have had for the first quarter has been very good. And we're seeing that the festive peak season is also looking particularly good. So I think the momentum is there. And I'm sure that Francois has told you quite a few things about that in the previous analyst meeting. The key is really to strengthen our guest experience. So we're going to be working on that very hard, so that we prepare when the market is a bit softer. We are also working on the future renovation of Two West Rock Hotel, Shangri-La Two West Rock Hotel, and the Four Seasons in the next couple of years also. We feel there is quite a strong potential to improve our gross margin in both of these hotels. The Sun Life hotels already doing very well. We also have a L'Île aux Cerfs regeneration project, which we're working hard on, and looking forward to really protecting the place, but at the same time, making sure that it's well run and that we respect the environment. And finally, we have a property project going on at La Pirogue, and one strong potential next to Long Beach, which we're working on, as well as next to Shangri-La, the Two West Rock, where there is a big site that we can develop. So this is the good news, is that this can bring marginal revenue, but also property development profits. So I'm pleased now to welcome Dave on board to talk to us about ESG. For us, it's very important. I mean, Eric spoke a bit about it, but I just want to say that we take it very seriously. And we had a presentation at our CIEL board today on our targets. They will tell you a bit about it. But what the job which is done on the ground is really exceptional.
Thank you, Jean-Pierre. So I don't need the mic. Good afternoon, everyone. So just to remind you that CIEL launched its sustainability strategy 3 years ago, and I believe we are making great progress. Our strategy is actually based on 3 pillars. The first one is fostering a vibrant workforce. So really here, our aim is to provide great employee experience to our colleagues, to our 37,000 talents across, and we are constantly trying to improve so that we become an employer of choice. On the inclusive growth side, given our international footprint, really we want to, adhere to our responsibilities towards the community. We want to have a positive impact on them. And in terms of climate response, as a group, we understand the urgency. We need to act now. Time is of essence here. So we are very proud that in CIEL, we have actually eliminated coal as a boiler fuel, and we will continue to ramp up on our climate initiatives. So for us at CIEL, as Jean-Pierre mentioned, we take sustainability very seriously. For us, sustainability is not a cost. We see sustainability as a driver to create value. So how do we do that? We call it the 3 R's. One is around building resilience in our business. Secondly is how do we remain ahead of competition, and how do we constantly benchmark ourselves against the industry? And third, around risk. So how do we integrate risk into our business processes? So let me start with the first R. First R is around resilience building. So as you all know, we are today, in this VUCA world, facing a lot of challenges. We face talent shortage. There's the impact of climate change. There is disruption in supply chain. So it's really key for us to build resilience. So how are we doing that in CIEL? I'll just give a couple of examples. So for example, our hotels, Sun, we have participated in the Smart Agriculture Program with the farmers in the East. This is a program that was done with the University of Mauritius, with Australian aid, and also with the European Union. So the whole idea is for Sun to actually increase their local purchase of fruits and vegetables. So that's one. We also partnered with an external consultant to launch our carbon accounting project. So we are really looking at our direct and indirect emission, and as Jean-Pierre mentioned, we are now progressing with our climate action plan. The other one is around our employees as well. So for us, creating great workplaces where we give great employee experience is important for us. So CIEL Textile, for example, is one of the first textile company in Mauritius, which has been certified as a great place to work last year. And we have many more companies which are coming through. In terms of renewables as well, we are increasing our renewables in our energy mix. So now we are having a 1 megawatt project, PV project, under the MSDG scheme. And interestingly, in CIEL Textile, for example, 36% of our energy is already from renewables, which is great. Moving on to the other R, which is in terms of remaining ahead of the curve. So how are we adapting our business model? How are we adapting our practices? I mean, Guillaume just mentioned now about farm living in Montalion. So for us in CIEL, we believe in integrating sustainability into our business offering. Farm living, for example, is for us a new way of redefining how do we live with nature and harmony with nature. It's a project that we want to be carbon neutral. The Nouvelle Usine as well is another example where we are proactively managing the transition risk by regenerating buildings so that we don't have any stranded assets. So obviously we are trying to leverage on that with Nouvelle Usine Phase 2. On the talent side, at CIEL, one of our key values is people at heart. So we believe in investing in people. And one of our key initiatives has been the Go Beyond Gender program. So over the last year, we have actually trained more than 1,000 leaders on unconscious bias. We currently have 33 women going through a unique Women in Leadership program. And more recently, we have trained around about 85 leaders as part of the Active Allies program. So really making our leaders aware of what is their role in supporting women in the organization. Innovation is key for us. Obviously, it's a key enabler. We want to bring innovation to our clients. So here, two great examples is what the CK group is doing in terms of bringing the latest technology. So CIEL Lab, for example, is the only lab which is approved in Mauritius to do advanced genetic tests, such as cancer or prenatal tests. More recently, we've seen in CIEL Textile, we are using augmented reality together with 3D design to revolutionize the way we are designing products, but also the way we engage with our buyers. So this is also helping us to reduce our waste, but also to reduce our carbon emissions. Finally, regulations, we all know, obviously current and future regulation is going to impact in the way we operate. We are already proactively looking at the reporting needs from ISSB, which is coming soon. But the good news is that most of our clusters are already using proven international methodologies and guidance such as the GRI. The final R is around, before I go to the final R, so all of the initiatives we are doing is actually gaining a lot of recognition. I'll just cite a few. So for example, La Pirogue has been recognized as the most sustainable hotel. We have our Winning Well report recently, which from CIEL Textile, which was recognized at the PwC Sustainability Awards, which was recognized. Healthcare, for example, CHKS, we are the only hospitals which has been certified by CHKS. So CHKS is an international certification that is recognizing our commitment to quality standards for patient care. So that's also great recognition. Finally, in terms of risk assessment, obviously, we need to have data to be able to manage a business or to be able to manage risk. So here, I'm very pleased to share that we have implemented an award-winning digital tool called UL 360. This tool actually allows us to manage KPIs which are from internationally recognized ESG framework. And as we say, we can't manage what we don't measure. For us, as we get more quality data through the UL tool, we'll be able to proactively manage and mitigate our risk. Obviously, I think we mentioned that last year, we have already integrated sustainability in our risk universe. Now, really the key next step for us is to conduct more in-depth climate risk assessment so that we look at the impact of the physical and transition risk for all our businesses. So that's it. I just wanted to conclude very briefly to share with you, for us, what is our philosophy at CIEL in terms of sustainability. So I don't know if many of you know this tree. This is a tree called Bois Koulou. So it's called Eugenia Bogeri. Actually, it's a tree native to Mauritius, and it was thought to be extinct since the 1960s. We actually discovered the first one in 2003 in Ferney Valley, and 6 more up until 2009. Most interesting is that this tree had flowers after 11 years in December last year, 2022. But even more interesting is that the seeds actually take 2 years to sprout. So for us, we are inspired by this. So at CIEL, for us, we see sustainability as a long-term journey. But for now, we feel that we are sowing the seeds for the future by investing the right resources at the right time, so that we create a better future for for everyone, and also for us to create a world that we can all feel proud of. Thank you. Bye.
Thank you, Dave. How fascinating this Boitou. And to think that it's all gone extinct and still there, nobody knew about it. It's fantastic. Same thing for the Cresserelle, actually. Just to conclude, I would like to say that CIEL strategy, every time we have this financial analyst meeting, we tell you what is upcoming, what we want to do. Without going into the details, I believe the presentation will be available, right? If the team can confirm that the presentation will be available, yes. But we had initiated actions just before the COVID crisis, and we, I believe, are fully on track. I mean, the COVID crisis in many ways allowed us to accelerate some of these initiatives. And so I'm pleased today to note that these results really show that addressing the strategy is extremely important, and now it's paying off. Just to remind you of our model, our investment strategy is really to leverage on the expertise that we have an entrepreneurial spirit. So we want the companies to be able to really express themselves. In that respect, I would like to say that the head office does a great job, monitoring all that, but at the same time, we remain very lean. We want to make sure we don't want to put too much cost on top. And then we want to create regional successes, which I think has been the case. And of course, doing that, as was mentioned, investing in sustainable businesses and driving that into Africa and Asia. We have, I think, a very solid group today. You've seen our figures. You've seen our balance sheet. So we have a strong capacity to invest. We have a strong presence in the region. And we have also a strong presence in India. I would just like to say that India is pretty impressive right now, what's happening in this continent. 1.4 billion people, 7.4% GDP growth expected. It's believed to be the next few years the third biggest economy in the world. And we have a strong position there. I mean, Eric talked about it. And we want to really leverage on that presence in India. We are, of course, already leveraging on our presence in Africa, but we feel that there is a lot more we can do in India, and we're going to be allocating resources to that. And of course, we will keep on seizing opportunities. We want to be better at what we do. We feel we are really improving, but by getting better, improving our margins, we think that we can deliver much stronger results. So that's really going to be our focus in the years to come, whilst keeping a strong eye on ESG, on digitalization, embracing the change that AI is going to bring to our various industries. So we feel very confident that we can strictly control cost and maintain our margin and use our balance sheet for further growth in this emerging world. So thank you. And we're going to move now to questions. I believe that for those who are on screen, you can also post your questions. I've got a special request. If you've got a question for the healthcare, Hélène has got a tight agenda, and we want to make sure we have a woman-friendly environment. So please, if you can just address the first question to healthcare, to her first, and then we will move to the other sectors, if you have any, of course. Thank you very much.
Tout d'abord, félicitations pour vos résultats. Donc, j'ai quelques questions sur plusieurs des clusters. Donc, je vais commencer par celui de healthcare. Donc, vous disiez, par exemple, pour les cliniques, vous avez des semi-private rooms, justement pour pouvoir cater for types of, pour différents types de clients. Je voulais savoir, et vous disiez que ce serait un peu plus beau marché par rapport à d'autres chambres. Est-ce qu'on pourrait avoir une idée au niveau du coût par rapport à une chambre standard?
Oui, à peu près 25 à 30% moins cher.
D'accord. Ensuite, concernant Ouganda. Donc l'objectif c'était, enfin dans le passé on avait dit, c'était d'augmenter le nombre de collection centers en Ouganda. Est-ce que ça a été fait? Je pense qu'il y avait 8, non?
Exactement, ouais.
Ouais,
alors on a effectivement rebrand 4 et ajouté 4, donc 8 qu'on a refait sous Siquet, et l'objectif cette année c'est d'ajouter encore 2. Donc on continue dans cette mouvance-là, effectivement. Alors, on avait aussi à Maurice, et à Maurice, on a ajouté 10 collection centers sous syllabe l'année dernière, et on a encore un projet d'en ajouter 8 au minimum pour l'année qui vient.
D'accord, merci. Pour moi, au niveau healthcare, c'est ça. Il y a quelqu'un d'autre?
Good, je vais au spectacle de mes enfants. Merci.
Oui, donc pour le segment textile. Donc, vous disiez que y a pas mal de leverage sur le marché indien. Si on regarde les ventes, sales per region en fait, l'Inde constitue à peu près 10% des ventes. Si on regarde les 6 mois. Est-ce que vous avez pu accroître votre part du marché par rapport à d'autres régions, US, Europe, vous étiez 45-35 ou c'est resté plus ou moins stable?
C'est resté pour l'instant à peu près stable. Encore une fois, on vise le haut du marché. C'est un marché qui grossit, mais la plupart est un marché assez bas de gamme. Donc on se concentre plutôt sur la qualité de notre customer portfolio que sur la quantité. Ceci dit, quand on regarde par pays, l'Inde représente 40 millions de dollars de chiffre d'affaires, ce qui le situe dans tous les pays que l'on fournit, on en fournit beaucoup, comme le 3e plus gros pays aujourd'hui. Donc le numéro 1, c'est les États-Unis, numéro 2, c'est l'Angleterre, numéro 3, c'est l'Inde. En sachant que c'est essentiellement pour accompagner nos clients, Hugo Boss, Lacoste et les autres grandes marques internationales qui se développent en Inde. Et ça, c'est l'axe fort. Donc 40 millions de dollars aujourd'hui. Combien en 2033?
250 millions de dollars.
You name it.
C'est ce que vous aviez dit.
J'ai rien dit.
Non, mais en fait, c'était...
ça, c'est le marché domestique. Maintenant, il y a l'autre dynamique que j'ai expliquée. Donc, il y a un shift. On est arrivé à un carrefour dans notre métier. Où, au début des années 2000, la Chine rentre dans le World Trade Organization et inonde le marché de notre métier. Et aujourd'hui, c'est monté très très haut. Maintenant, c'est en train de refluer. Donc, même si le reflux est progressif, les volumes sont extrêmement conséquents. Et il est évident que l'Inde a un rôle majeur à jouer. Je dois dire que l'Inde est un pays textile très fort, mais beaucoup plus en amont. Sur le coton, sur le fil, sur le tissu. Et il y a assez peu d'acteurs de garments qui soient très solides. Il y en a quelques-uns, mais pas beaucoup. Et en tout cas, dans la chemise, il y en a très peu. Donc, le marché de la chemise milieu de gamme était monopolisé par 3 gros groupes asiatiques. CIEL, qui avait Textile Industry ici, Mauritius. CIEL Smart Shirt. CIEL is totally out of the US. Donc, il y a un flux très très important. Hugo Boss a acheté 90% de ses chemises avec CIEL. Aujourd'hui, 0. Donc, tout ça, on capture une grande partie de ce business-là, essentiellement en Inde aujourd'hui.
Vous avez dit, juste une petite clarification, donc actuellement vous avez 7 usines en Inde, non? 600 vagues alors. Donc vous allez avoir encore une usine encore additionnelle.
On a 7 au total. On
ouais,
a
une huitième.
acquis une nouvelle usine. Enfin, ce qu'il faut savoir, c'est que les nouvelles usines sont beaucoup plus grosses que les anciennes. Donc là, on a racheté un bâtiment existant qui est assez récent, qui est vraiment world class, qui à maturité peut employer 3500 à 4000 personnes sur un seul et même site, alors qu'aujourd'hui, on a 6 sites qui totalisent 10 000. Donc on est vraiment sur une dimension beaucoup plus grosse. Pour l'instant, on occupe un tiers du bâtiment, donc on a encore 2 tiers du bâtiment pour monter nos capacités et suivre la demande qui monte.
Donc, pensez-vous, donc, grâce à cette acquisition, pouvoir accroître votre croissance, on va dire, je pense que vous essayez de fixer un target growth de 10% par année?
Non, pas 10%. Non, je n'ai pas dit ça.
Ok, non, mais je pense. Okay.
Non, on va croître. Historiquement, alors juste à titre d'indication, sur les 15 dernières années, la croissance moyenne en dollars par an au pays de CIEL Textile était de 3,5%. Ceci dit, la région était flat et l'Inde, effectivement, était plutôt à 7-8% en moyenne. Donc, on pense avoir une croissance dynamique. Maintenant, attention au marché, qui est quand même le marché de la consommation qui est en souffrance. Il faut savoir qu'avec les contraintes de sustainability, durabilité, est-ce que la quantité de consommation de pièces textiles va être la même dans le futur ou est-ce que ça va être moins? Des marques comme Lacoste travaillent sur la durabilité. Si vous achetez un polo Lacoste, sachez qu'il a été testé sur 60 lavages il y a 2 ans. Aujourd'hui, c'est sur 110. Donc, il y a des augmentations de qualité et de prix. Si vous achetez un polo, il est passé à 100 € contre 80 € il n'y a pas très longtemps. C'est pas grave, c'est une marque premium, mais quand on descend en gamme sur un marché plus de masse, je dirais, on a vu l'année dernière, il y a une grosse inflation des prix et les quantités baissent. Donc, what does that mean exactly? We shall see. C'est pour ça que j'ai dit que les meilleures équipes gagnent et c'est la meilleure stratégie qu'on puisse avoir.
D'accord. Dernière question par rapport au textile. Vos capacités de production. Donc, vous êtes 20% Inde, Bangladesh, c'est ça?
40%.
40%.
Plus de 40%. On est à peu près 20% Maurice, 40% Madagascar.
40%.
Et 40%, un peu plus de 40% en fait aujourd'hui l'Inde et Bangladesh, mais surtout l'Inde. Bangladesh, c'est plus de 40%.
D'accord. Et est-ce que donc ça va augmenter au fil du temps? Donc si vous augmentez votre part de production Inde, Bangladesh, donc je pense qu'ailleurs il faudra diminuer le.
Non. C'est comme j'ai expliqué, on vient capturer du business qui était en Chine précédemment. Donc notre stratégie, comme j'ai précisé, c'est de consolider Maurice-Madagascar. Donc de maintenir au minimum nos actifs, donc autour de 220 millions de dollars. Et la croissance, principalement, va se faire en Asie et principalement en Inde, puisque la demande est très très forte. On a vraiment une position très très forte là-bas.
D'accord. Donc ça, c'est OK pour le textile. Finance.
Je
vais bientôt finir.
C'est l'interrogatoire, chacun son tour.
Merci Eric.
Donc, je voulais juste comprendre un peu. L'objectif pour vous, c'était concernant le market share du mortgage market. Je pense que c'était un objectif d'accroître votre part du marché. Bon, c'est quelque chose que vous aviez parlé dans les previous meetings. Est-ce que ça a été d'une part accompli? Première question. Deuxième question, vous avez dit que vous allez roll out un trade finance platform. Est-ce que c'est en cours? Ça a été fait? Troisième chose, par rapport à BNL Madagascar, donc faire un upgrade de votre core banking system. Est-ce que ça aussi, ça a été fait? Voilà, merci.
Je vais commencer par le dernier. Donc, le core banking system à Madagascar, le projet est en cours. On s'attend à un premier test vers octobre, mais pour ne pas impacter la fin de l'année financière, le go-live a été calé pour février de l'année prochaine. Tout est dans bonne voie. Pour revenir à Bank One, effectivement, on avait parlé d'une croissance du mortgage book. Et le book a effectivement grew à 40% pour les derniers 12 mois. Donc, la tendance est bonne et c'est le primary growth on the rupee book. Pour revenir au Trade Finance Platform, on est en train de rechercher une solution qui va desservir nos clients, principalement sur le continent. On est toujours à la recherche de la solution optimale, surtout en partenariat avec nos co-actionnaires INM. Donc, on s'attend à avoir un peu plus de solutions concrètes. Donc, la plateforme n'est pas en place, mais le projet est toujours en cours.
D'accord. Donc, je n'ai pas tout monopolisé. Je vais finir ma dernière question par le segment Properties. Donc, juste une petite clarification. Vous avez dit que, en termes de rental per square meter, vous étiez beaucoup plus compétitif par rapport à d'autres acteurs du marché. Je voulais juste comprendre, vous êtes cheaper de combien de pourcents par rapport au marché et aussi, donc ce qui fait, comme vous l'avez dit, ça vous laisse de la marge pour augmenter vos rental price per square meter. Et combien de marge ça vous laisse, on va dire, over the next few years? Merci.
Ouais, alors peut-être que, donc, ce qu'il faut comprendre sur Evolis, 50% du book, c'est du light industrial and warehousing. Et 50%, c'est des bureaux et avec nouvelle usine, avec un peu de retail. Donc aujourd'hui, je dirais qu'on est 25 à 30% below the market. Sachant que, donc si je allons prendre que le marché est à 450 roupies en office, un peu Shalenco. Donc nous, on sort actuellement à 300 roupies. Donc à notre average rental sur mon balcon. Et c'est pas fully furnished, mais c'est already equipped. Donc ça nous donne quand même une marge de manœuvre importante pour travailler. Et pareil sur le warehousing, le warehousing aujourd'hui se fait autour de 200 roupies. Donc nous on sort actuellement, on est à below 150 roupies. Sachant que les usines de textile, aujourd'hui on a un special rate pour les usines textiles avec un rental per square meter qui est autour de 70 roupies. Donc as CIEL Textile move out, qui est le cas pour une des opérations, ça nous donne de la marge sur le book pour travailler le book et d'emmener des tenants at a much higher rental. Donc c'est pour ça que je crois que ayant créé la base, ayant créé des destinations successfully, maintenant c'est à nous de venir travailler sur l'offre et pouvoir travailler le marché sans avoir la pression que peut-être d'autres développeurs ont parce qu'ils ont construit à des coûts qui sont importants. Les taux d'intérêt ont augmenté, donc ce qui met énormément de pression sur les yields et sur le rental rate au square meter. Donc je dirais notre offre est différente, mais we are in a good space to move forward.
Et dernière petite question, donc vous parliez de nouvelle usine phase 2, donc je pense qu'ils en ont parlé dans les médias aujourd'hui. Est-ce que vous pourriez nous donner un peu plus de détails sur ça?
La nouvelle usine, c'est vraiment, on a essayé de créer un urban regeneration avec un style de travail qui est moderne. Donc il y a du sport, il y a des bureaux, il y a beaucoup de SME, de PME, start-up type MIPS, Funkies, et tout qui sont présents. Et on a aussi donc commencé avec le retail. Et là, on va bouger beaucoup plus donc avec une offre de retail plus importante. Donc, qui est bien aussi parce que normalement sur le retail, il y a quand même plus de marge. Donc, toute la phase 2 qui sera à peu près de 3000 m². 3000 m² sera sur du retail. Et il nous restera la phase 3 qui seront des bureaux premium où là, on va venir pitch un rental rate at market price où nous avons encore à peu près 3000 m² à développer.
Oui. Be surprising if you didn't.
Congrats on the nice results, guys. I think I've been away from the market. I think I've said that in a few analyst meetings I've been to this round, where I've said, I left the market for 18 months and then I came back and I'm saying like, these are crazy P's I haven't seen in my career. But today, actually, all my questions all get towards Lakshman, in fact. The first question I had for you, Lakshman, is, you talked about mortgages going up, etc. So that's interesting growth. What I was more concerned about is with the rise in interest rates, although they haven't been as heavy, right? But we did have two very sudden interest rate hikes at the end of last year. I wanted to understand, how have you seen an impact on credit quality? And has it really affected mortgages as well? Because, you've got those limits where, some people might have been borrowing at, at the cusp of the 40% of income and things like that. So how has that impacted the business?
A good question, Bhavish. So
we have yet to see the impact. What the impact right now is the growth of the book is slowed down because that capacity to repay is dented because repayment is capacity is being eroded. So that is the immediate impact. In respect of the called non-performing loan in that particular portfolio, it's remained flat. We haven't seen a further deterioration. We don't know whether there will be a lagged effect. But historically, I would say in Mauritius, even when rates have been higher in the past, I would say it's a book that behaves. I would say, broadly speaking, Mauritians tend to pay their debt on the property that they have purchased. So we have yet to see a deterioration, something that we need to watch for if rates maintain at this level or even go further up. Hopefully it will be cyclical and it levels out.
Sure. Okay, so that's comforting on the mortgage side, but how about the overall loan book? Have you seen any impact with the rate hikes?
Some impact on the corporates. We cannot deny that the cost of debt going up and let's say revenue not being generated at the same level or growth not being at the same level. So that we've seen, but nothing frightening. Nothing frightening yet. I think we are all realistic. High interest rates can dent or slow down economic growth, but this is monetary policy. You want to reduce or slow down consumption and stabilize and address inflationary pressures. So we've seen stress cash flows in some instances, but not to the extent of, if you look at Bank One, seeing a deterioration in the non-performing loan ratio, which has been stable for the domestic market.
All right, thanks for that. And since you talked about monetary policy, that's a fantastic segue to my next question, which is that, I know we had a new monetary policy framework that was set up at the start of the year. So for a while, I think it was good for the banks because, you were getting this weekly rolling over of all your undeployed cash. That has stopped. So how do you see the impact of that and how you're going to counter that loss of income? And what exactly is going on in monetary policy these days? Because, I've been a bit out of the circuit, so, I would hope some enlightenment on that front.
Well, what's happening on the monetary policy? The last point you make, I think, is more for the regulator. I want there to substitute myself to that. But clearly, they want the stability of the interest rates and monetary policy to be effective, which goes to your first point. They've been mopping up all the liquidity in the system, absolutely everything at an early phase, and the banks then were fairly comfortable to reflect the interest rates that was being put forward by the central bank. So that lasted for quite a while. Liquidity started becoming more costly for the banks if you needed the liquidity, because it was all being mopped up by the Bank of Mauritius. Then it has been relaxed and it's a bit more of an auctioning process. Everything is done being mopped up. Its rates are going a bit down, so there's a bit more liquidity coming back to the market, and well, the banking sector, the corporates are benefiting from that. All in all, it has benefited the banks, at least at an early phase. We reaped the appropriate reward for the excess liquidity in rupees, which are still persisting in the system. So that's a bit what I can say. I don't know if I have fully responded to your question.
So it was maybe more forward-looking in that I was trying to assess if, can I expect your net interest margins to remain more or less constant or see growth in NII next year, or should I expect your margins to start shrinking a bit because of that? That change would, give you this burst of profits or margins earlier this year?
Yeah, I don't think we'll be able to make good for that quantum of liquidity and the margin earned out of that. What I can say for Bank One, the rupee book is quasi fully utilized primarily through loans and advances to clients. So we expect the margin to maintain itself. It was highly convenient to have any surplus to be redeployed into the instruments that were issued by the Bank of Mauritius. So to make it simple, we don't expect a significant contraction in the net interest margin. Actually, my forecast, it will maintain itself if the book is fully utilized in terms of the liquidity that we have, and which is the case right now.
Thank you.
Pleasure.
It's good to be able to focus on returns as opposed to debt and everything else. So you mentioned at the start, Jean-Pierre, that there's a focus now on return on capital employed, and we've seen it through the presentations. I wondered if you could give us some color as well, whether there's any targets that you've set in terms of improvement and how it drills down across the clusters.
Yes, in fact, we've defined very clearly our investment appetite and the return on investment. Jérôme, I don't know if you have detailed, granular information that you could provide.
We have targets for each of the clusters, depending on where they operate, you know, because of the risk associated with, let's say, operating in Africa versus in Mauritius. So each cluster has set targets by CIEL, the majority shareholder. But just to give you an overall perspective, let's say at CIEL level for the group, we have put as target for the next 3 years a minimum of 15% of return on capital employed. 1.5. It's the minimum we're targeting.
Wow, okay. And maybe in that sense, would it mainly be organically done, or are there property levers that you'll be pulling to get to that target?
Well, it would be probably a mix. I can't say in the next 3 years, but it's definitely going to be a mix.
Okay, thank you.
Okay, well, I think there's, as one side of our strategy, just to complete on the question, is we have a lot of assets, a lot of properties, and this is hence the importance of being able to deploy a good return on that, because this is bringing down our average, as you've seen in our segmental reporting. Okay, there doesn't seem to be more questions, so before we conclude, I just wanted to say that I'm so happy to have such great teams. I think at the end of the day, it is the results of people doing a fantastic job on the ground in each companies in the region and in Asia and in Mauritius, of course. So I take this opportunity to say a big thank you to them, and also a big thank you to the finance team under the leadership of Jérôme, the team that is doing the investor liaison, the communication, the accounting team, everyone at head office supporting. It really went like papier à musique, and you know, I'm very proud of the team and the way they report, and I hope you appreciate the details we provide. I think we're probably one of the groups providing the more detailed, transparent information. So thank you very much to you as well for your attendance and your questions, and looking forward to having a cup of tea or a drink together. Enjoy your afternoon.